fundamental forecast for gold-neutral gold prices snapped a 3-week winning streak, with the precious metal down 1.72% to trade at $13.23 ahead of the New York close on Friday. The losses come alongside a rebound in the USD and Treasury yields despite expectation the FOMC will hold rates next week. All eyes will be on Janet Yellen Co. next week when the Federal Reserve holds its quarterly interest rate decision on September 20th. Markets will be closely eyeing the fresh quarterly projections from Fed officials as they pertain to growth, employment and interest rates. In the wake of Hurricanes Harvey and Irma, central bank doves may argue to further delay the normalization cycle, with the dollar likely to face further headwinds if the committee opts for a shallower path for interest rates. Gold has been well supported over the past few months on persistent weakness in the greenback and rising geopolitical tensions, and that's not likely to end anytime soon. That said, prices responded to structural resistance this week, and although the pullback may have a bit further to go, the broader outlook for bullion remains constructive. New to trading, get started with this free beginner's guide. A summary of IG client sentiment shows traders a net long gold. The ratio stands at 2.28. 69.5% of traders are long bearish, reading long positions at 12.4% higher than yesterday and 15.8% higher from last week. Short positions are 10.8% lower than yesterday and 23.9% lower from last week. We typically take a contrarian view to crowd sentiment, and the fact traders are net long suggests spot gold prices may continue to fall. Traders are further net long than yesterday and last week, and the combination of current sentiment and recent changes gives us a stronger spot gold bearish contrarian trading bias. Learn how to use gold sentiment in your trading. Get in more information on sentiment here. Free Gold Daily. Last week we highlighted that, while the rally in gold has been quite impressive, prices are now approaching some longer-term objectives, and even though the broader focus remains constructive heading into next week, the risk remains for some corrective price action before heading higher. Indeed, gold reversed off confluence resistance this week, with the pullback now testing support at 132,125 into the close of the week. Note that prices have now set a clean monthly opening range just above basic trendline support and will be looking for a break of this region for further guidance on the near-term outlook. Join Michael for his bi-weekly live webinar on the foundations of technical analysis. Register for free here. Gold 240 minutes. A closer look at price action highlights the potential for a bull flag formation here. Watch for support next week into the monthly opening range lower parallel at 1316, with a breach of this near-term descending channel targeting 1355. The 2016 high close at 1366. A more significant Fibonacci consideration is eyed just higher at 137,779. A close below 129,599 would be needed to suggest a more meaningful correction is underway. Bottom line, prices need to stabilize at these levels if the broader uptrend off the July lows is to remain viable. Look for a definitive break of the monthly opening range heading into the Fed next week. Written by Michael Boatris, currency strategist with Daily FX. Follow Michael on Twitter at MUB4X. Contact him at mboatris@dailyfx.com or click here to be added to his email distribution list.